Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Wednesday, the 8th of April. Starting off with comms, and you can see here that there's been an initial rebound of the floor of this falling July price channel from last year. Shares coming off a very oversold RSI level towards 20, bouncing basically in the same RSI zone as they did in February, after which there was a reaction. One would expect a reaction now as well, back towards perhaps the 20-day moving average level at 0.9 pence. Also key resistance in focus at 0.8 pence, which was the February floor. But really, we need to break that on a weekly close basis to say that comms is out of the woods in terms of the massive breakdown that we've seen over the past year. Next up is a stock which we've been also looking for recovery on, even though we've seen that since basically last summer, the shares have also been a bit of a train wreck in terms of the price action, coming down from over £1.20 since those times. Current situation that it looks quite encouraging in the sense that we've got this 4 days now above the 20-day moving average at 32.7 pence, RSI back above 50 as well. Decent divergence, bullish divergence in the RSI window, and surge in the volumes as well. So probably now with the those who can afford a stop loss back as low as the 20-day average would use that. Otherwise, maybe an end of day close back below the latest gap floor at 37.6 pence. Would be the money management stop as we look for a further push towards the 50-day moving average at 50 pence. Above that, probably one would be able to say that on this occasion the shares are going to head back towards the 60 to 80 pence zone, which is the main post-October resistance. And as I said, stop loss 32.7 pence as a far away stop loss, but that would also be the line in the sand in terms of the recovery here. Back below that, and things would look ropey once again. Next up, it was a stock which did very well last year, but this year is trying to sort of get a foothold. A higher low now for April here versus the March low around the 2 pence level. That was a bear trap rebound from below the 2.34 pence December floor, so that is encouraging. And since then, really, that December floor has come in as new support, so gives us something to go on in terms of recovery for aggressive traders. Also, the RSI back above the neutral 50 level, and surge in the volume there. If you're cautious on the stock, maybe wait for an end of day close above 50-day moving average at 2.79 pence. That should lead back towards the 200-day line and former January resistance above 3.5 pence. Otherwise, going long now with a stop loss maybe just below the 20-day average, say 2.52 pence or 2.5 pence would be the thing to do on a technical basis. Metal Tiger, a stock I've been meaning to get around to for quite a while now, quite a few weeks. Looks encouraging in terms of the recovery we've seen here in recent days. The key here is that we're actually back above the 200-day moving average. That's just starting to come in there, print through at 0.77 pence. A decent stop loss area for that represents a decent stop loss area. I can also see the way that all the near-term moving averages are now rising. So we'll have golden crosses here for the shares. This looks like a sort of V-shaped bull flag breakout for the stock. And although the target of 1.8 pence at this resistance line from July looks rather ambitious, it could very well be that we head back towards at least 1.3 to 1.5 pence over the next 4 to 6 weeks. The stop loss back below the 200-day moving average, as I have implied. Finishing off with the Plutus Power Gen. Here we have a sort of recovery situation from the initial 0.5 pence zone, which was seen in the autumn. It looks as though we're in a rising trend channel from the end of August last year, with support coming in towards the 20-day moving average, 0.9 pence. While we're above that, a new leg to the upside, probably as high as 1.4, 1.5 pence over the next month or so. So getting in now or towards the 1 pence area looks to be the thing to do, especially as we have also seen a rise in the volume. That's it from me. More updates at masterinvestor.co.uk.